The stock is quite nervous, post the con call. So let's clarify a couple of issues. We have with us Mr. Manish Nuwal, the Managing Director of the company. Hi, Mr. Nuwal. Good afternoon, and thanks a lot for joining in. Well, the street has got very, very nervous post the con call. Give us a couple of numbers. Your volume growth, now you're guiding for around 8 to 10%. Could you confirm that? And also, could you tell us, on this base, what kind of growth are you looking at for FY26? And what does it mean in terms of revenue growth? So let's get this out of the way. Volumes and revenues for this year and for the next.
If you talk about the revenue, if you look at my Q1 numbers, we grown by only 0.7%. And after the Q1, in Q2, we grown by 27%. Q3, we have delivered 38% growth. Q4 also, we are going to deliver 30% plus growth. So if you take all these quarters together, so our growth will be around 23% in revenue terms.
Okay, revenue. And what about the following year? 23% revenue terms, 8 to 10% volume terms for FY25. For FY26, yes, what kind of growth can you deliver? And also give us an understanding about margins, because that's held around 27%, 26, 27%. So can you maintain this?
So if you talk about the margins, then at the start of the year, we said that we are going to achieve better margins, which means that in last year, we did 23.3% EBITDA margin. This year, we were expected to deliver around 25% something percentage in EBITDA margin group level. And we said that we will do 25-26%. Actually, we are delivering around 27.5% as of now. And we believe that the same traction will continue in the next quarter and next year as well.
You didn't give us the revenue number, sir. So we'll say that from 26.5% you'll improve, but revenue growth for FY26, we missed that number with the volume growth.
Yes, for the next year, we are firmly believing, and based on our current statistics, we believe that next year the volume should grow more than 15%. And on revenue terms, now defense is unlocking, international subsidiaries are doing better. We should do 30% growth in the next financial year.
30% growth in top line in FY26 and 15% growth in volume terms in FY26. So those are the two big numbers to focus on. Can you, since you're talking about defense and the export market opportunities opening up, let's talk about this Pinaka multiple launch rocket system order, because this is what's generated so much of buzz, right? The total quantum obviously is large. It's huge, over 10,100 crores, but this is over many years, I'm guessing. So how does it start flowing into the P&L? When do you book revenues? Just give us some more details around this. And apart from Pinaka, you were also very, very recently announced, a big MOU with the Maharashtra government, again, for defense projects. So I don't know if there's some linkage between Pinaka and this, or if they're separate. Just tell us a little more on how the revenue booking will be.
So in last 12 years, we were spending a lot for defense vertical, and we have expanded our product portfolios, which includes Pinaka as well. So after so much of hard work, we have received the contract yesterday, and the total contract is worth 6,084 crores. And it has two variety of Pinaka. And for each variety, there are different timelines for deliveries. So we believe that based on the contract, 80% of the value should be delivered in next 8 to 9 years, and rest all we will deliver in next 5-6 years. So in P&L side, it will start giving impact in the next financial year.
Next financial year, if you...
26.
Okay, so I'm just repeating the numbers. The total value that will come your way, you said over 8-9 years, is about 6,084 crores, correct?
No, the total contract is 6,084 crores. Out of that, almost 80% will be delivered in 8 to 9 years.
No, is that entirely your share, or is it being split between... That's entirely your share, right? 6,084.
That's Solar's share.
Okay, got it. So to what extent will the revenue recognition be in FY26? I'm guessing it starts slow and then kind of builds up. And if you could just clarify on this Maharashtra MOU as well on the defense side.
I think based on the contract in next financial year, we are expecting that it will be slow start in the first 1 or 2 quarters. From Q3 will pick up, and we should do around 300 crores in next years. And then from 27 FY, we should be doing around 500 crores plus every year for 8-9 years. And as far as the MOU with the Maharashtra government is concerned, like you are aware that our company has participated in many development programs. We are developing programs or products on our own. And recently we have successfully tried to a very large extent Bhargavastra. So we are working on anti-drone systems. We are working on variety of rockets to meet all those upcoming demands for next 5 to 10 years. The company has thought that we should expand our facilities, and that's why we have signed an MOU with Maharashtra government, which is around
Just
11.
just a quick question on defense. I believe defense is about 21% of your total sales mix right now. Now, with all these high-profile orders coming in, Pinaka, the other stuff you're doing with Maharashtra government, what will defense be as a percentage of your revenue, say in FY26? And then what does that do to the margin? I'm interested in knowing whether with these high-profile defense orders, whether your margin improves from 27% or is it margin dilutive, these large government orders?
So last year, our defense sales was only 7%, and in this year now it is 17%. And as a result, the margin has increased to 27.3%. As we move forward, as defense sales goes up, definitely contribution from defense will be much better. And our international subsidiaries are also doing quite better than what we were doing in a couple of years back. So I believe that 27 to 28% EBITDA margin should not be a problem for our company.
Final question, Mr. Nuwal, before we let you go. The problem for the company is that the market capitalization has become so huge, right? So then justifying valuations becomes an issue. But I'm looking at an ICICI Securities note, and they are saying by the end of this year, you'll do around 1,250 crores, very approximately. But then because of this ramp up in business, they are expecting that in the next 2 years, that's by FY27, they are factoring in more than 2,000 crores of net profit. Is that gettable?
Sir, if you just connect these two dots, what I said, that in next year, our defense will pick up from the current level of say around 1,500 crores on annual basis level. If it picks up and expand more than 2,500 crores in next year, and our domestic and international market doing better. So if you club these two things with EBITDA margin of 28% approx, then definitely our profits will be around those level, what you have said just now.
All right. You know, Mr. Nuwal, normally we would connect the dots, but since we have you on the channel, we rather confirm about that. So thanks a lot for joining in. You've clarified on a couple of issues. The stock had come off from the top because, the street's expectation was you would grow far higher in FY25, but you're saying FY26 will be even better than FY25. For the time being, the stock is more or less flattish. We'll watch out for these revenues, margin scaling up, and the big number, 2,000 crores of profitability possible in the next 2 years. That's FY27. Dilip Bhatt